Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters. It's just now to go down to the closing bell in stocks. Higher here. The Dow's up about 270 points. The S&P 500, your broad gauge, is up about 0.3%. And your tech-heavy NASDAQ, that's up about 0.2%. Let's welcome in now Inez Ferre. Inez, what are you watching in the market?
Josh, could this be the start of a Santa rally? As you just mentioned, the Dow up 270 points, the NASDAQ up as well, and the S&P 500 heading for a second record in a row. All three major averages heading for 5 straight days of gains. So we are seeing an uptick with the markets right now. I'm going to pull up the interactive with respect to the sectors, taking a look at the sector action. You're looking at real estate, financials, consumer staples, healthcare, industrials, all of those that are leading the gains. Over on the NASDAQ 100, we're looking at Apple that's flipped to up 1%. Also, Amazon and Meta are slightly higher. Micron up more than 3% as well. Looking at crypto, we are seeing, crypto hasn't been doing so well over the last couple of weeks. We're looking at Bitcoin around 97,000 per token. But really where the action has been at this year has been the stellar moves that we have seen in the precious metal space. So gold had been above 4,500 per troy ounce. That's in the spot market. And in the futures, it continues to be in that territory, although pulling back a tiny bit from its record. But nevertheless, I mean, you're looking at gold year to date up 70%. Silver futures also in record territory, up 140%. Strategists are saying that silver is in a deficit. When you're talking about gold, central banks have been buying gold. There's the expectations of easing rates that's also pulled this gold rally. But I just want to pull up this chart so you can see sort of like the parabolic move that we have seen. This is a 5-year chart when it comes to gold and when it comes to silver. Take a look at this parabolic move. This is why there are some, believe it or not, Josh, the street is very bullish when it comes to gold, but there are some strategists that are saying, watch out. You've got Mike McClone over at Bloomberg that I spoke with, and he said the last time that we saw the velocity of these moves was in 1979. In fact, this is going to be the best year for gold and for silver since 1979. And he's saying when you see a move this big, guess what happened after gold peak in 1980? It crashed more than 50% into 1982. So he's saying, watch out. Take profits because of the velocity. But look, the street's still bullish and calling 4,900 Goldman Sachs for gold by the end of next year could be an upside risk even beyond that. So look, it just depends on where, how you can stomach some of the volatility that we tend to see in precious metals. But man, this has been a stellar year for these precious metals.
That chart. Inez, thank you. Appreciate it. Well, stocks rising on this holiday shortened trading day. The S&P 500 climbing to a fresh intraday record. Investors officially on Santa Claus rally watch. The Santa Claus rally is any market gains for the last 5 trading days of December and the first 2 trading days of January. Joining me now is Joseph Shaposhnik, Rainwater Equity founder and portfolio manager. Joseph, it is good to see you. So before we get to 2026, Joseph, obviously you want to talk about your outlook there. Let's just take a beat on 2025. What do you make of the year, Joseph? What did you learn?
Well, it was another great year. Averages now had 3 fantastic years in a row. I think that obviously the prevalence of AI, not just of the AI beneficiaries, but the spread of the impact has been enormous across the markets. And clearly that's been the dominant theme. Who are the winners? Who are the losers? Losers have obviously had a very tough years, and the winners have been fantastic stocks.
Let's talk about what's ahead here. With the SPX, if you look under the hood, it sounds like, Joseph, you're bullish on the 493 instead of just focusing on the Mag 7. Let's start there. Explain that. I mean, is that valuation, Joseph? Is it earnings growth, positioning? Explain it.
I think that there have been a number of businesses in the Magnificent 493 that are perceived as being hurt or compromised by the growth of AI. Valuations have gone significantly lower for a number of those companies, and businesses that are just not participants in the opportunity of AI have also not performed particularly well in that bucket of the Magnificent 493. And I think in 2026, what we're going to find is that many of these companies are harnessing AI to get better, to lower their costs, to improve the velocity of introducing new products. And those businesses will begin to get the benefits of that as people recognize it. It hasn't happened in the last couple of years, but I think we're going to notice that in the next couple of years.
Well, what does that suggest, Joseph, about what do you think I do with the Mag 7, though, in 2026? Am I avoiding those names? Am I trimming exposure? Do I have to be more discerning? Maybe next year, Joseph, it's more like, the Mag 3 or 4.
I think so. I think the Mag 7, it's tough to paint them with a broad brush because each one of them has a specific story associated with them. But I think just from a valuation perspective and the fact that they performed so well for such a long period of time, I think that some of them will take a break, some of them will perform well, but really the opportunities for outsized returns next year are going to be outside of those 7 businesses.
There was a story out there, Joseph, sort of a narrative that had built that, the AI trade and trend had better stay intact. If it doesn't, the market's going to come off its wheels. But having said that, recently you can look at, some poster childs of the AI trade. I think of an AI heavy name like an NVIDIA. It's well off its 52-week high, Joseph, but this market has continued to grind higher. I'm just curious what you make of that.
Well, I think that it bolsters the thesis that the 493 certainly have legs. And I think more broadly, the economy is stronger than people thought it would be when we started the year. Rates are probably lower today than where we thought they would be. Inflation is probably a tick lower than we thought it would be. So the underlying conditions are somewhat better for the broad market, and the broad market has been able to weather, as you talked about, the bumps in the road that are inevitable with regard to the Mag 7 and the AI trade. So I think it's positive for the index as we enter 2026 that we've seen some level of broadening. And obviously we see opportunities in the defense sector, in healthcare, and selectively in technology as well as this rally continues to broaden.
Yeah, let's get to some of those specific names and picks, Joseph. You like Broadcom here, for example. How come? What do you like about CEO Hock-Tan's company specifically? Is the business model, margins, his AI story?
Well, our strategy is to invest in recurring revenue businesses, and Broadcom has one of the great technology recurring revenue businesses. When you think about how they're positioned with regard to AI, they're really very, very well positioned in a category where the product, the GPU, is 90% of the cost of the solution. And Broadcom with their XPUs is dramatically reducing the cost of effectuating the outcome that AI provides. And so we think that they'll continue to take market share among the hyperscalers, which is going to drive fantastic revenue growth in the AI business. We see the AI business doubling in 2026 for Broadcom, and we see it growing very, very rapidly after 2026. So long term, they're very, very well positioned with a product that is highly efficient for the customers.
And Joseph, you also mentioned you like healthcare. At a high level, what do you like about that sector, and what, in your opinion, is a smart way to play it?
Look, healthcare has been out of favor for the last 3 or 4 years. Healthcare spending peaked in the pandemic, and a lot of demand was pulled forward for the businesses that we like. And those businesses tend to be the recurring revenue tools providers to the healthcare industry. Think of Thermo Fisher, think of Agilent, Mettler Toledo, provider of products into medical labs. And so those businesses are beginning to see better demand, and it's slowly getting better for those companies. And generally speaking, when things get better in healthcare, they stay better for a long period of time. So we see a very long-term growth opportunity among most of the healthcare industry, but particularly in the medical tool space.
And finally, Joseph, you mentioned you like defense. Now, President Trump, you saw this. He's been making some headlines there saying he wants these companies focused more on spending on new plants, not buybacks. Walk me through why you like defense, Joseph, and what, in your opinion, are some smart ways to invest in that sector.
Well, the big picture trend in defense is that European NATO spend has to go basically is going to triple over the next 10 years. And so we're thinking about which businesses are going to benefit from that multi-year trend of growth in that end market. And so what we like are the recurring revenue aftermarket providers of parts to the defense industry. So we own HEICO, we own General Electric, and TransDigm, and all of them will be benefiting. All of them have about 40% of their revenues tied to the end market. All of them have very, very strong recurring revenue business models, and they're very well positioned for a number of years to benefit from that, what we think is a very long-term and durable trend.
Joseph, great to have you on the show today. Happy holidays.
Happy holidays.
Coming up, 2026 could be a blockbuster for the IPO market, but plenty of uncertainty remains. We've got to look at the key IPOs to watch, and they may not be the names you're thinking of. Now time for some of today's trending tickers. We're going to start here with tech. Intel is under pressure thanks to NVIDIA. Reports saying NVIDIA is not moving ahead with plans to use Intel's chip production process. According to Reuters, NVIDIA recently tested the so-called 18A process. This highlights a pain point for Intel amid its struggling manufacturing business. NVIDIA, remember, earlier this year invested $5 billion in Intel, but did not commit to using its chip manufacturing services. Up next, take a look at Tesla as the company faces a new investigation. The National Highway Traffic Safety Administration is launching a probe into the EV maker's Model 3 compact sedans. This comes amid concerns that emergency door release controls may not be easily accessible or clearly identifiable. The focus of this investigation is on model year 2022 electric vehicles. The U.S. auto safety regulator has also been looking into Tesla's advanced driver assistance system over alleged violations of traffic safety laws. And lastly, let's take a check here on crypto. Bitcoin continues to slip, missing out on the broader seasonal optimism. The world's largest cryptocurrency stalling here between 85,000 to 90,000 range. The slump in the digital asset follows a turbulent couple of months as crypto struggles to regain its footing after falling sharply from its record high back in early October. Well, 2026 could be the year of the initial public offering. Late Thursday, Motive, a company backed by Google, filed to go public next year. That company is currently valued at nearly $2 billion. That's according to Yahoo Finance private market data. And with all the talk of OpenAI and SpaceX going public, it could be a blockbuster year. Joining me now, we've got Greg Martin, Rainmaker Securities Managing Director. Greg, it is always great to see you. So here, Greg, it was a choppy 2025, you say, for the IPO market. Highlight tariffs, rate uncertainty, the government shutdown, of course. So what do we expect looking ahead, Greg? What's going to happen in 2026 that gives you cautious optimism here?
Well, Josh, good to see you again, and thanks for having me. We thought 2025 was going to be a big reopening of the IPO market, and as you point out, there were some issues, tariffs, rate uncertainty, but I think that is behind us largely. Obviously, we're seeing a very good GDP print coming. Inflation's lower. We're now officially in a rate decline, a interest rate declining market. And of course, markets are at all-time highs. And we still have this amazing backlog of really solid private companies, many, even centacorns, if you will, $100 billion market cap companies, any one of which, if they went public, would actually dwarf the total amount of proceeds raised, at the end of 2025. So I think there's a lot of really good elements. The VIX is low right now. So again, there's always risk. There's always things that could pop up. We could have some unusual geopolitical events like we did in 2025. But I think the market right now is set up for a really big 2026 IPO, and the pipeline is so good that it wouldn't be a surprise if we just, got back to something closer to 2021 levels.
If you were to rank, Greg, the catalyst for IPO issuance next year, can we rank what matters most, Greg? Is it rates? Is it stock market stability? Is it a few, headline making big names testing the public market successfully? How would you rank these?
There's a little bit of all of the above. I think stability is usually the most important. I think, when you think about a new issuance, there's inherent risk in any new issuance because the company hasn't been public before. So it's testing the market for the first time. So I think stable equity markets is usually number one for me. So I like to follow the VIX when the VIX is low, which like it is now. That gives me more comfort. Obviously, when you're in a declining interest rate environment, people are going to cycle over to equities. That's usually a positive. But clearly people are going to watch the success of new IPOs. So I think when an IPO performs well, that will usher in new IPOs because people are going to want to access the market because they see a receptive demand for their IPO. So they're all important, but I think the number one most important thing for me is just a stable equity market.
So we talked about reasons for optimism next year, Greg, right? What are some risks, though, we need to think about? What are some, potentially negative factors that would be on your radar?
Yeah, I mean, we still have a volatile government situation. We're still worried about another government shutdown. Obviously, we thought the IPO market was going to reopen kind of after Labor Day. And then, of course, we had the government shutdown and nothing was going public. The SEC was shut down. So, we definitely have to watch, the government and whether it's open and open for business. There's obviously geopolitical events that can happen that are sort of more macro in nature, and that's going to cause volatility. There is an issue where right now we have a market that's really buoyed by the interest in AI, and it's obviously really floating the equity market significantly. So I do think that you have to watch all of those potential risks. But right now, everything feels fairly stable. And as I said before, if we see stability, if we see predictability, I think we're going to have a good market. But we have to always be careful about those potential factors that could be negative.
You mentioned AI, Greg, just to stop there for a beat. Perhaps some jitters there, at least in the public markets. I just looked, Greg, at like NVIDIA off its 52-week high there, Broadcom off its 52-week high. But what are you seeing on the ground here? I mean, from you look at through a different kaleidoscope. I mean, is there just as much excitement about that AI trade and trend, Greg, as if I asked you, 6 months ago or 12 months ago?
Yeah, I mean, the AI trend is always a little precarious. Every quarter we sit and we watch with bated breath NVIDIA's earnings report, just to see if it's still going. NVIDIA is obviously, the benchmark for everything AI because everyone's pretty much a very high percentage of people are buying their chips to push AI. It's right now we're in the build phase of AI. I mean, we're still very early innings, and one of the things that will start to be measured is the ROI of AI applications. Are consumers, are businesses seeing return on investment of AI? Right now, they're buying it, they're experimenting with it, they're trying it. There's a lot of promise around AI, and so we're going to start to see whether whether the money is worth what they're actually getting in terms of increased productivity. So far, the returns are somewhat mixed, and I don't think we're going to know anytime soon because AI continues to improve. But the infrastructure side of the game, which starts with NVIDIA and then goes to GPU infrastructure companies like CoreWeave, which was still up 100% this year, even though it's been pretty volatile. There's a new company that will likely go public in 2026 called Lambda Labs. There's a company called Crusoe. So we're seeing it in the private markets. There's definitely been mostly upward pressure. We're seeing OpenAI talking about a $800 billion financing. We've seen Anthropic, meteoric rise this year. XAI is raising money. So the infrastructure side has been very strong. But at some point, the rubber's got to meet the road. People have to start seeing return on the investments they're making in AI. And that will be the biggest thing that will press it up or down. But I think it's too early to tell at this point. You mentioned a couple there, Greg, but I'm just curious, what other names are on your radar here that you think, okay, these are names that could be IPO ready in 2026? Yeah, I think there's a fairly large list of big companies, that are kind of 10 billion market cap and up. There's companies that have talked about going public for a while, like Canva, which is a SaaS presentation company. There's a company, called Ramp, which is in kind of the expense and card management space. There's a company in the human resource software business called Rippling. There's a payroll company called Deal. There's a messaging business, Discord, we've talked about for a long time. Motive, obviously, you mentioned, just filed to go public. And then, of course, there's the really big guys. There's the SpaceXs that have talked about maybe going public sometime mid to late 2026. That would be potentially $1 trillion market cap, could be $100 billion, raise. There's OpenAI I just mentioned. There's Databricks that have been talking about going public. They just raised a round, valuing them at $130 billion. There's Stripe that is always on the radar. I mean, these are companies that could go public at any time. And so I think there's the mega names that if they go public, are really going to create a groundswell. And then there's the smaller companies that I just mentioned. So there's a good long list and that's just the tech sector. I'm not even covering, mostly some of the other sectors, but so there's a good long list of companies that could really create a groundswell of IPO interest this year.
Yeah, I want to end there on that point, Greg, because I think it's interesting. I mean, let's say you had a really high profile mega name go public next year. I mean, let's say, Greg, it was SpaceX or Anthropic or OpenAI. I'm just curious, what kind of ripple effects could that really have on the broader IPO market? What can that mean, Greg, for IPO issuance or sentiment?
Yeah, well, when you're talking about a SpaceX or an OpenAI, you're talking about potentially raising $100 billion, which would be the largest IPOs in history. So you're really testing the how much interest there is in new issuances there. So you're really, it's a real big test of the capital markets and whether a company like that can come public and raise that amount of capital. And it just sort of goes to test how much money is really on the sidelines waiting for these companies. And we're in a market that's kind of dominated by the Mag 7. And so if you want growth, you're investing in those. And where most of the growth today is in the private markets. And so it's a real test of, when you can finally access these great private companies, how much people are willing to open up their wallets and invest in these businesses. We've seen, because of the scarcity of these companies in the private markets, their valuations have gone up significantly. But when they kind of come out, they got to present themselves publicly. It'll be really interesting to see just how big the universe of potential buyers are for these companies in the public markets.
Greg, always a pleasure to have you on the show, my friend. Merry Christmas.
Merry Christmas. Have a great holiday.
Coming up, we're taking you into the trading pit. Jared Blickery, Kenny Polcari giving you the best investment moves to make as 2025 comes to an end. The clock is counting down toward the end of 2025, and with just a few trading days left in the year, there's some money moves you may want to make. Jared Blickery and Kenny Polcari break it all down in this edition of The Trading Pit.
We got to get to what investors want to know about their portfolios, and I've got a nice little list here. Let's just briefly review tax loss harvesting. You can, if you have a security or a stock that you own right now, you can actually sell it, and then you can take that loss and possibly offset your tax bill for next year. But you got to be careful not to buy it back for 30 days. Any thoughts on that?
Right. So, well, it's something that as a wealth manager, an asset manager, that's what you do, right? You should take advantage of it. So individual investors should take a look at their portfolio and take advantage of any loss. And if you want to take a gain, you're going to take this loss, write it off against the gain, and then reallocate some of that money into either a new sector or, like Jared said, you're going to wait 31 days and then reinvest it if you like the name that you sold.
All right. Now let's talk about rebalancing and reassessing portfolio risk, because that's what investors should be focused on right now.
Right. So you really have to take a look at the portfolio at the end. You have to see whether you're out of balance, right, in terms of have stocks gone up in value that they've now created a portfolio that's not in balance, or at least not in balance the way that you want it to be. So you should always look to fix that. Now, it doesn't mean you have to sell something. The way I do it is I add new money to the sectors that are now underweight, and then I bring the whole thing back into balance again. So you could do it a couple of ways. That's just the way I do it.
All right, now let's talk about risk tolerance and time horizon, very key concepts that we talk about in trading and investing here. I know you spend a lot of time on this, so break it down for us.
So you really want to talk about time horizon, who you are and who the money is for. You might be in your 60s or 70s, yet the money we're talking about is for children or grandchildren that might be out 15, 20, or 25 years. And so it should take on a different risk profile than if it were for you at that stage in your life. That being said, you should also be aware of the score, the risk score of not only the portfolio, but the individual names within the portfolio. Because every stock, every ETF has its own risk score from 1 to 99. Anything above 71 is further out of is beyond the S&P in terms of risk, right? It gets riskier than the S&P 500. Anything less than 71 becomes more conservative. So you just need to understand how the different names in the portfolio interact to give you an overall score.
And also something key here, some older investors might need cash flow, and so that comes into dividend needs, cash needs, and that's something to start thinking about for the first quarter.
Yeah, of course, it should be something that you're always thinking about, again, depending on who you are and where you are in the life cycle, right? Right now, you might be 60 but fully employed, and you're not looking for dividend income, you're not looking for the portfolio to generate income you're going to take, so you want to have it reinvested. If you have a portfolio that's generating a lot of income, you just want to reinvest it. If it's income you need or want, then you should figure out, what it's going to spin off. You can expect to spend 4% of your portfolio and never run out of money. So $1 million portfolio you'd take out $40,000 a year. So you'd want to get dividends that would pay about $40,000 a year, and then that could go on forever, and you'd never run out of money.
Sounds like a good prospect to me. Kenny, I love breaking down tickers with you, and we can do so in line with some of the biggest themes this year. And we've done this in some other segments here. So I want to hit some tickers that we haven't. And this is Apple. This is year to date. And what I want to point out here is Apple was really late to the party off of those April 8th lows. Finally got started around July, August, and it's been off to the races now, hitting record highs.
Right. It's taken off, right? It broke out. Not only did it break out of the April lows, but then it broke out of back in March, right? We busted up and through that. And now it's part of that AI story, right? We're hearing Apple come out not only at the end of the year, they've got new products, and Christmas season's coming, holiday season's coming, and all that stuff. But in addition, there's a whole AI theme going on with Apple. So look at it now. It looks like it's completely broken out and will continue in this uptrend.
Now let's take a look at another hyperscaler, Amazon. And this chart is really interesting to me. 240, a big level here. Looks like we had a little poke above it. Might have been a false breakout. Nevertheless, we got an interesting trading range we're working with here that I'm seeing.
Right, so I think it was a false breakout because look, we traded up, we came right back down. It didn't even stop, right? It didn't even stop to test it to see if support was there. It broke right back through. So I think we are stuck in this trading range that you see, and you could probably expect it's going to try to hit resistance one or two more times before ultimately breaking out, if it's going to break out. I think it is in the new year, but I think it's going to take us some time to do it.
And so you'd wait until the breakout?
I would wait until the breakout.
Shares.
Now, if you already own it, like I already own it, so I'm just not going to do anything with it, right? I'm going to sit and watch it. But if I see it start to break out, then it may change my mind, cause me to jump in and buy some more.
All right, we're going to stick with the hyperscalers, Microsoft, and this is another one. It was off to the races in April, but it has fallen off its peak now with NVIDIA.
Right, so I think this is just a little bit of gotten dragged into the story that maybe it's a little bit stretched in terms of its valuation. Certainly the fundamental story from Microsoft has not changed, but I do think this whole recent story about the whole AI trade either being in a bubble or being stretched is just taking its toll on names like Microsoft and NVIDIA. I don't think it's a reason to panic. Certainly we're not anywhere near the lows. It's kind of going to consolidate, and here is what it appears to me. But I think you just have to keep your eyes on it. Again, it's a name that I own, so I'm just going to sit and watch and see how it performs.
All right, NVIDIA, we're gonna tackle the OG here. Similar story, similar chart, kind of.
Right, exactly, right. So we saw it's taken off. It kind of, it got itself challenged up there in November. It's backed off. It's kind of holding right in here. You want to watch it. See that line that you just drew?
Yes.
That you want to watch that and see if it holds that level. If it does and starts to trade up again, I think it's going to remain in that channel. And so you just kind of have to watch it. For me, this would be a hold. Again, we own it. I own it. So I'm just going to continue to watch. If it breaks down below here, then I think you have to watch, because then I think there's a potential that it even breaks a September low. That would be something you'd want to keep your eyes on.
All right, let's fast forward to a different sector. This is going to be the banking sector, finance. Here's Bank of America hitting record highs recently to little fanfare.
Right, well, hitting record highs along, if you look at a couple of the other names, you look at the XLF, the financial ETF, it is also breaking out. Bank of America is another one of those names that I own. I like it. I love the fact that, it's broken out here. Not with a lot of fanfare, but I like the way it is acting. And it clearly feels to me like it's in this uptrend. It is certainly within the rails that he just drew.
Yeah, and very similar name here, JP Morgan.
Same thing.
It's kind of broken the uptrend, but it doesn't look like anything critical. It's just kind of consolidating here near the highs.
Right, so what it did was it broke that that uptrend, but you see it came right down to that level again that you drew, and now it's bounced off of that. So I think it's going to remain in this trading range, and you're going to want and see whether it breaks up or breaks down based on its next move, right? Whether it's able to pierce up and through the November high there, or whether it's going to back off and come to the November low.
All right, here's another ticker I got from you. I want you to tell me your reasoning on Verizon. Is it for the dividend? What do you like about Verizon?
For me, it's just all about stability and dividend in Verizon. It trades in a very tight range. It pays about a 6.75% dividend. It's kind of it's a big mega cap name. It's very stable. It doesn't, it's not up 150% or down 20% in any one year. It kind of stays stable. But for me, it's all about the stability and the dividend, which I just take and reinvest.
Yeah, very good. We have a little bit of time for the quantum trade here. So IonQ, and this is a multi-year chart here. This goes back, I believe, to their IPO. Let me just dial up the year to date. And there we go. Bounce kind of came back to break even. And it's very volatile, but
it's a very volatile name. It's in the quantum space. And so quantum, I think, is going to be a big theme going into 2026. It's already a theme now in late 25, but I think as we continue to get on that AI narrative and that AI trade, you're going to see specific quantum names. And IonQ is a name to watch, right? Again, you see how volatile it is. At one point, even just a month ago, it was up about, what was it up? I think it was up about 40%. It's now almost flat on the year, but you see it came right back down and bounced, which is a positive sign, right? It could have easily broken and traded back to the March lows. It did not. So I want to keep my eyes on that. Again, it's a name that I own, but if it breaks below this line, then I'm going to look to add.
Another quantum trade, surprise, and we only got 30 seconds. IBM.
I love IBM.
Big Blue. Let's do it.
Right. I love IBM. It is a large mega cap name, takes you all the way back to the 1960s. Look, it's
there you go, the 1960s right here.
Yeah, it's had its great move. And what a lot of people don't recognize, besides being also a good dividend payer, it's got a lot going on in the quantum space. So if you want quantum exposure with a more stable name, IBM's the way to play it.
Coming up, I'll look back at the top trending tickers on Yahoo Finance this year, plus making moves in the options market. We've got 3 trades to watch. In a turbulent yet winning year for the stock market, we lay out which names captured the most attention. Yahoo Finance's Jared Blickery breaks it down on Stocks in Translation.
2025 has been a year of surprises. At the outset, many pros were doubting that year 3 of this bull market could match the outside gains of the prior 2. But the AI trade, it keeps driving attention and driving behavior. And on today's Stocks in Translation, we're not looking at the best performers of 2025. We are looking at the names that you, the viewers, checked in on the most on the Yahoo Finance platform. And we're breaking down our top 10 trending tickers of 2025. So let's take a look at the scores on the door. And here we got the top 10 tickers. The first thing you might notice is that this is an AI-dominated list with maybe Bitcoin in the middle as the exception. Then you're going to see the perennial favorites, that's NVIDIA and Tesla to the left there. They are in a different zip code. Our NVIDIA quote page has a cool 250 million page views this year, while Tesla clocks in at over 180 billion. And while Apple is usually top 3, it was edged out this year by Palantir with nearly 100 million views. And from there, things stabilize as AMD, Amazon, Bitcoin, Meta, Supermicro, and Intel, they all clocked 40 to 60 million viewers each. Now, let's take a look at this list from a different perspective. This is our Yahoo Finance heat map, and we're looking at the box size right here. So each box size corresponds to the market cap of the company, and all of these are large to mega caps, with 2 in the $4 trillion bucket. That would be NVIDIA and Apple, all the way down to Intel over here at 180 billion. And in the far lower right, you almost can't see it there, you can see Supermicro, which is just shy of $20 billion. But the other thing you might notice is that the only losing ticker this year is Bitcoin, although Amazon is pretty close to break even too. So each of these has a different story. Now let's dive into some of the charts that really tell this story, and this is going to be a year to date. So we'll start with NVIDIA here. This has arguably been the poster child for the entire AI trade, and you can see it got kind of sucked into the post-Liberation Day redness there, but it has bounced back strong. It really hasn't done much over the last few months, but with 30% gains in a year after almost being up, what is it, 1,000% over the last 3 years. There you go, 963%. I think investors are going to take that. Now Tesla. Tesla's really interesting because over the last year, and this is a 3-year chart too, it has traced out a cup and handle formation. If it can break above 480, it has the ability to really break out, and 2026 could be the year to do this. If it fails at this level, well, maybe it's got to consolidate a little bit longer. Now let's take a look at Palantir. This stock is up 2,500% over the last 3 years. Let's dial down to a year to date. And you can see, like NVIDIA, hasn't really done much over the last few months, but still sitting on 140% year to date gains. Now, Apple, year to date, this stock is only up 9%, but it has come back nicely after it just kind of stalled out after the Liberation Day melee, where a lot of stocks were taking off. It was going sideways, but it finally caught up over the last few months. And so Apple has been generating recent record highs, even as NVIDIA has been going sideways. Now here's AMD to round out the top 5, 71% year to date. This is a very volatile stock, but again, I think investors will happily hold on to gains like that for a stock like AMD. Now, Amazon, barely positive for the year. This is a stock you kind of got to look at over this entire 3-year bull market. Still up 150%, but this was a year of consolidation. We'll have to see if 2026 breaks to the upside or the downside. And you know what? Bitcoin is a very similar story, sitting on more gains over the last 3 years, but this has been a year of consolidation. It happens to be down about 10% right now, and 75,000 is the line in the sand that I am watching. I think that gets hit before it takes off again. Then Meta, this is another 3-year story. Hasn't done much this year, but we'll have to see if it can continue the trend. 445%, very strong over this bull market. Getting towards the end here, Supermicro is a very volatile stock, and while it's up this year a decent percentage, you can see it was up a lot more in early 2024. So this is one of those high beta plays you got to trade with caution, but guess what? The Yahoo Finance audience loves to day trade this stock. And finally, here's Intel. This is another kind of sine wave pattern here. Let me just dial this down to year to date so you can see it has really taken off over the last few months. It's become a volatile stock, but it was doing nothing for the first 6, 7, 8 months of the year. So I think investors at the end of the day, at the end of the year, going to be pleased with this one. So let us dial it back down here. I got a few things that are going to tell us what to watch in 2026. So just think of these as the questions that move these tickers. First is the AI spend payback test. Investors are going to want to see the revenue and not just the profits of these companies, not just the spending. And then next up is margins versus mega cap spending. Can these giants keep growing without the profit engine getting dented? Third, keep an eye on the chip cycle inflection point. Does demand for semiconductors, does it broaden out, or does it just stay limited to AI? Fourth, watch those crypto regulation headlines. 2025 was arguably the best year ever for crypto regulation, and Bitcoin isn't even positive, so let's see if sentiment can shift. And finally, monitor those rate cuts versus a real economy. If we get more cuts, ask why. Is it a soft landing scenario, or are we sinking into recession? Bottom line, these were the tickers investors just could not stop watching in 2025. Next year, what matters is whether the stories hold up, and that's where the rubber meets the road. And tune into the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.
As 2025 heads into its final stretch here, the options market is looking ahead into the new year. We're breaking down what traders are pricing in and what it signals about the market in the options pit, sponsored by Tasty Trade. Joining us now, we got Scott Bauer, CEO of Prosper Trading Academy. Scott, good to see you. You do have 3 trades, and I want to get to those, Scott. But first, maybe high level, Scott. We're wrapping up 2025. We're heading into the new year. I'm curious broadly, Scott, how do you want to be positioned here?
I think very cautiously optimistic. Volatility is cheap enough that to own some upside is great, but volatility is also cheap enough to get that protection to allow you to stay in the market right now. And for those that, maybe don't want to sell off any of those losers or haven't done that yet, or, are optimistic for next year, that's great. But I am always extremely, extremely conservative, both the way I trade on the floor and in my other portfolios. And I think volatility is too cheap. So it is a great opportunity to be able to hedge yourself, whether it's with S&P options, that trade right here, or the VIX that trades next to me. It is a great way to hedge yourself and still remain exposed to the marketplace.
Sound advice, Scott. Let's get some trades, my friend. So let's start here with the cybersecurity sector. Walk me through what you're seeing with Palo Alto Networks.
Sure. I really, really like cybersecurity in general. And when I go to a certain sector, I typically like to go to best in class. So for me, cybersecurity, Palo Alto is the one. This is where I like to do what's called a poor man's covered call. A lot of people that own stock will write or sell call options further out just to generate some income against their long stock. As an option trader, what I like to do is buy a deeper in the money call option. So in the case of Palo Alto, it's the 140 strike call, which is like $45 in the money. That cost me $50. So that's what it costs me, or for each contract that would be $5,000, but it's a lot cheaper than buying the stock. And then I can sell calls against that. This allows me to have a really nice upside and use the capital efficiency of using options rather than just owning the stock outright. I think Palo Alto will be an outperformer for the year, probably has upside of 25 to 30%.
All right, from cybersecurity, Scott, to apparel, walk me through the trade with TJX.
I think apparel, retail in general might be really tough for the year. But those on, let's call it, the mid to lower tier levels, like a TJX, like a Costco, I think those are the ones that are going to shine. And again, when I go to a certain sector, I like best in class. I think TJ Maxx is really well diversified, and you're going to see a lot of shoppers that are, maybe at that upper level, maybe at a Macy's or something like that, start to trade down or start to shop down a little bit. So very similar type of trade in TJX that I just had in Palo Alto. In fact, what I'm going to do is I'm looking at the 120 strike call that I can pay about $40. I'm going out to September for that. So that's like owning the stock, deep in the money call. And then again, I can sell income generating call options against that. It allows me to stay vested. It allows me major upside. And I really think, again, TJX, 30-40% upside this year.
Last one, Scott. Let's talk fintech and SoFi. That what a move for that name. We're up about 80% this year. What's the trade, Scott?
Yeah, this one may be a little bit more riskier than the other two, but similar sort of trade. This one, I'm going out over a year. I'm going a leap option, January of 2027. To buy the 20 strike call. That is right, the 20 strike call. I can do that for about $11. That's not much above the premium or parity from where SoFi is trading right now. Again, this allows me opportunity throughout the year, 13 months, to keep selling upside options against it. I think SoFi, out of all of the, let's call it newer fintech type stocks, even with that 80% run this year, has a lot more to go in 2026.
Scott, great to see you. Happy holidays.
You as well, Josh.
We're wrapping up today's Market Domination. Don't go anywhere. We've got you covered with all the action. Following the closing bell, stay tuned for Market Domination Overtime.